Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa Coram here, and we have an interesting show for you today. The indexes were quiet, but a lot of divergences underneath the surface. We will explain, and joining me to do just that is my colleague, Ed Carson. Ed, what do you have for us today?
Yeah, I want to take a look at Chef's Warehouse, Advanced Micro Devices, and Qifu Technology.
Yeah, and a few interesting ETFs to check in on as well. So let's start with a look at the major indexes. Today, the NASDAQ was able to squeak out a fractional gain in the stock market today. Meanwhile, the S&P 500 was down a little less than 0.1%. The Dow, the hardest hit today, and down just 0.4% on the day inside yesterday's action. And on the upside, small caps led with the Russell 2000 up some 0.6% headed into the close. So this is a day, Ed, where it looks quiet on the surface, but a lot going on underneath.
Yeah, I'll just say on the indexes, they all pretty quiet today, which is fine. We were talking yesterday about how maybe the market needed a pause, and that's sort of what we're getting this week. A pullback yesterday, a pause today, just a little breather after a big run. Yeah, while the indexes were quiet, there was a lot of interesting motion underneath. Some stock sectors and stocks that were leading did well, but a number of them had downside reversals or just had bad days. So it was interesting. Depending on what stocks you own, you might have saying this was a great day, or this was a nothing day, and others would say, "Man, I got hit really hard." So it definitely depends on what you own today.
Okay, let's also take a look at the S&P 500. So quiet, near highs here. Not a whole lot more to say, Ed.
No.
It's a quiet day. I mean, we're in a power trend, and we'll take a look at FFTY to show just what kind of day it was for growth stocks. This IBD 50 ETF reversing lower, down about 1.7%. So definitely a different look than the Nasdaq's fractional move on the day.
Yeah, definitely a lot of growth. Had a tough day, though it definitely wasn't all over the place. We looked at SMH, which there's a number there. That SMH was just fine. And there were a number of chip stocks. We'll look at one that did pretty well. And in some other AI hardware plays, there were some China names like Qifu. There were names that did well. There were names that did not. It was just an interesting day to have that kind of divergence between the chips and FFTY.
Mhm. And let's also take a look at copper. Some trade war tariff headlines here impacting the copper market. The CPER ETF up over 8% on the day, Ed.
Yeah, and the futures, which closed at 1:30 Eastern, so well before the stock market closed, that went up, I think, a little over 13%, the biggest day ever for the copper futures. So the ETF, it did sort of trail off a little bit after that initial burst. President Trump says he's going to impose a 50% tariff on copper imports. That's much more. I think people were probably expecting 25% sector tariffs. Probably some people were hoping he had forgotten, but there were some names. So if you're a copper producer in the U.S., like FCX, that one did well today. It came off highs. And it does that. And then SCCO, which I do not believe has U.S. operations or not significant ones, that one reversed lower. So it'll be interesting. That does mean higher prices we're going to see higher copper prices. And we already had higher copper prices probably than the rest of the world because of the anticipation. So interesting move on copper.
Yes. And before we take a look at those individual names, let's check out the 10-year yield. Now it looks like a 5-day win streak for the
Yeah,
10-year.
pretty significant. It is bouncing off of a 2-month low.
Right.
So it is but it is breaking the downtrend. It'll be interesting to see if that comes in. It's just a lot of things going on. There's been some stronger economic data. The tariffs are back in play. Yeah, this is something that'll influence stocks. It'll also influence gold and other things that have been rallying maybe on lower yields.
Yeah. Okay. Now let's turn our attention to some individual movers here. Very indicative of the tough market in pockets that we've seen, Ed, despite the strength at the index level. Chef's Warehouse ticker CHEF a breakout in Monday's session, but disappointing follow up today with the stock down 6.4%. So a breakout turned into a fake out.
Yeah, this really disappointing. I mean, it had volume yesterday. I mean, the highest volume in quite a while. So there was a lot to like about that action, but yeah, it came right back down. Intraday was really well below the 50-day line and well into the sell zone. I mean, I suppose you could have tried to hold on or only sold part of it and see, but that's a pretty ugly action, even at the close. It's not. This is not great. Again, could bounce back, but this is not what you want to see. I think that maybe, look, if the market's going to go sideways,
Mm.
or go down a little bit, it just means that the risk reward on new buys might be just a little more tilted toward risk. I'm not saying, oh no, some will work. I mean, and if the market stops, sort of going sideways, but it does seem like growth stocks are prone to that. It sort of felt like at the open today, growth stocks got really excited. Investors were really excited, even though the indexes weren't doing anything really, and they're up like 0.2%, 0.3% on the Nasdaq maybe, but you saw some nice gains on certain stocks, but then
Mm.
quickly pulled back. So yeah, just something to watch. I think this was one that probably people who bought it probably just needed to take the lumps and move on.
Yeah, from a technical perspective, it was a decent breakout. And you could even have a stock that's checking off all the boxes from
Yeah,
a fundamental and technical perspective. And this could happen. Axon kind of comes to mind. It had
yeah,
a picture perfect looking breakout a number of months ago that failed, and it had incredible fundamentals. But one thing that I would say a mark against Chef's Warehouse is even though
yeah.
it's had accelerating earnings growth the last couple of quarters, the revenue growth has just been in the single digits. So this isn't your powerhouse growth stock here, at least by the textbook definition. And something our chief content officer, Chris Gessel, has been focused on lately is stocks with really strong revenue growth. So, looking at that top line growth, some research he shared internally with us is that he looked at stocks with a certain liquidity threshold over the last year. What were their returns and what sales growth did they have? And the stocks that had at least 20% sales growth definitely were better performers over the last year. So, one little tidbit there, sales growth is definitely something to think about when you are selecting stocks to buy.
I completely agree. And I do want to make one other point is that one reason why we talk about these buy points, sometimes early entries, sometimes traditional buy points, is that if things don't work, it lets you know that's not what's supposed to happen. So it lets you know if you bought this, if this had run up 20% and then the stock is down 6%, I mean, that might be the start of something bad, but you don't really know. But this is, again, anything can happen. This could bounce right back and oh no, you should like, but this was a negative signal, and it tells you something in a way that if you bought somewhere randomly, that it
Yeah.
wouldn't tell you.
Right. And we know this through studying stocks throughout stock market history, right? IBD has looked at what are those common trades with the most powerful stocks? How do they act? And where's the ideal time to get in? It is these proper buy point areas. And then it's an odds game. Like you said, anything can happen. But more often than not, when you see this type of action, it leads to either further weakness or more base building more often than not.
Yeah.
Okay, let's go to AMD, the chip stock that you mentioned, up on the day by 2.25% here, Ed. Still somewhat in the early stages of a turnaround, it seems.
Yeah, I think some people were buying this as it went through the 200-day line. I get it. There was like not just the 200-day line, there was that line that you drew. So it was a reason to buy that. Now it's sort of pausing. It's sort of forming a handle. I mean, it's too low. If you look on a weekly chart, this still has a long way to go. This is not a proper handle, okay? Because it's too deep. I suppose if you start the base, more the
Mhm.
170 level, I mean, maybe it's in the upper end, but so there's still a lot of overhead resistance. Let's be clear. It'd be great if it formed a like a new base within here, but I can see why if this one made a strong move from here, or especially if it paused for a little while, that people would say, okay, now I'm going to buy it because it made a big run from the 200
Mhm.
line. You could say, well, maybe it needs to take a break. That it almost doubled from the lows in a couple of months. Is this really going to go, or is it just sort of short covering and bottom feeding, not really moving? And it seems to be showing some staying power, but it's just there were some AI hardware plays. This was an area of strength, was some of these AI chip and hardware plays, especially some of those that were laggards a little bit. Let's be frank. I mean, they're not NVIDIA. NVIDIA's at new highs. AMD is not. And so, you could say, well, why should I bother with AMD? And that's a good question. That's an internal debate. Like maybe you should wait for and wait for another opportunity for one of the leaders.
Mhm.
But AMD is making a case that it's trying to come back, and so are a few others.
Yeah, absolutely. And while buying with a cross of the 200-day line can pay off, and it did in this case, I like buying at least when you get a first base above
Hmm.
those major moving averages, including the 200-day. But even then, it's more my style to wait for those moving averages to all turn in the right direction. We still have that declining 40-week line on the weekly. It's still a declining 200-day line on the daily chart. So for my style, I'd like to see a little bit more progress. But like you said, Ed, maybe it forms a nice orderly base here. We'll have to see over the next couple of weeks. And let's round things out with a look at Qfin. This is Qifu technology in the China space, up 2.1% on the day, Ed.
Yeah, and this one has sort of spotty on the revenue growth for sure. Very strong earnings growth and the sales growth. Just okay. Last quarter, double digit, but not great. And the track record. This has been doing pretty well. This one had, today you could sort of, it's gotten a cup with handle base. It's sort of today broke the downtrend of a handle within that handle. You could sort of see that. I suppose somebody could have been there, or yeah, like could have started a position here. Uh, this is one of the better performers in China. Again, I think that given the way the market has, some sectors can move back and forth. There's an argument for some China exposure. If you think that maybe the U.S. is going to go sideways, or just to hedge your bets, even if you don't feel that way. I do think some people would say I don't want anything to do with China, and I definitely think there's a lot of reasons to say I don't want to get heavily exposed to China for all sorts of reasons. But
Mhm.
this one has strong growth. It's not some crazy sky high valuations. There's a lot to like about this name, out there with some solid growth. So uh, there's a few of these names that are acting well. You could have made taken a position here. You could use this handle within a handle, that actual top or the trend line that you drew from the top of the base. But definitely some places where you could enter this name, over time.
And a couple other ways to look at the action in the China market as well as international stocks. One way would be KWEB. This is a China Internet ETF. Similar action here, clearing a trend line within a handle, up 1.8% on the day. So, this, at least you're a little bit more diversified. You don't have that single stock risk,
Yeah.
but it's not immune to taking hard hits, down 9.4% on 4-4. So this one can swing pretty wildly, even though it's a basket of securities. And then a little bit more broad, we have VXUS. This is the Vanguard Total Stock Index. XUS. We've seen an uptrend from those lows in early April, but as of late, as the US market really started coming back to life, this has underperformed, even though it remains in a strong uptrend here, Ed. So, just some additional perspective there on the international market for folks.
Yeah, and I think on VXUS, especially when you think about Europe and Latin America and other places,
Yeah.
I mean, what's been really pushing higher with the US, a lot of it's been the AI stuff and a lot of it's speculative growth. And that's not when you
Mhm.
think about, oh, Europe and Latin America, you're not
Right.
thinking about those. And so, I mean, there's certainly other things that are working, but I mean, I do think some of the reasons why Europe was outperforming the US just on a sector basis,
Mm.
some of that has shifted a little bit. But these are good ways to try to, again, if nothing else, to think about diversifying, while still you're trying to diversify into leading areas, not diversify into weak stuff,
Mhm.
and just sort of hope that something vaguely goes up. But these are definitely other ways to play, sort of the outside U.S. market.
Great points there, Ed. We appreciate it as always.
Thank you, Hallie.
And thanks everyone for tuning in. That's it from us for today, but we will be back with more tomorrow morning on IBD Live, investors.com/IBD Live for all the details. We'll see you then. Then we'll see you tomorrow after the close. And we have our weekly Wednesday Investing with IBD podcast hosted by Justin Nielsen live at 5 p.m. Eastern on Wednesday with guest Mish Schneider. So make sure to check that out. We'll see you then.